Good morning. Thank you for tuning in to another pre-market pulse scan. This is for trading on Thursday, December the 1st, 2016. Been getting some questions on the YouTube channel as well in the trading room, so we're going to deal with it. The first one is about rich minds. So let's look at this one, and we're looking at the pre-market pulse waves here. All right, this one here is still in a locked-in downtrend with a crash alert for today's trading session as the market opens in a little while. And we do also show that this market is poised where it has the potential to do it hardcore. What do I mean by that? Well, the downtrend channel is locked in. We got a crash alert, and we got a positive swing Vix, which means we have a 40 reading under the positive momentum column. So what that means is we had a nice sort of a pop positioning for the next leg down, possibly. So you can't ignore that. You have to really trade what you see here. So that pulse wave price trigger for the sell side cannot be ignored. Likewise, the pulse wave reversal buy trigger cannot be ignored. This is going to be an interesting one to watch today. This is a really good trade to get your feet wet. If you are flat in this particular one, this is an opportunity to put on a position. So this is a good one to watch. The downtrend, like I said, is still locked in though. The thing I like about the pulse wave price triggers is that independent of any alert or any other technical indicator, whatever you want to call it, news, whatever, the pulse wave price triggers are absolutely phenomenal. You don't have to know anything about that market. You don't have to know anything about the news that's coming out, any of that stuff. The pulse wave price triggers in and of themselves are phenomenal. Just placing those orders ahead of the market handles everything you need to know. For those of you that are premium subscribers, you have the opportunity to enter the academy first and go through the first introductory classes. And if you recall, I gave you the story about what happened when I was first in the beginning stage, the development stages of the pulse wave price triggers going back many years ago. And I all but got kicked out of the cotton pit up in New York because what happened was, again, the way the mechanism of the pricing mechanics work, I place the orders ahead of the market. That's how the system works. You place the orders ahead of the market before it opens, so your orders are setting there. Then when the market opens, those orders are executed. Well, what happened was I would always, and yes, it's just how I designed the system. I mean, it is what they're facts. It is what it is. If you look at it, what happened is sometimes I would end up buying the low of the day and selling at the absolute high of the day. So the high of the day will be my exit ticket, and the low of the day will be my entry ticket when I'm buying. Likewise, when I was selling, I would sell at the high and buy at the exact low of the day before the market even opened. And believe it or not, they caught on to me after the third trade in the cotton pit. And so what they would do, they got hip to it. See, what happens is when you place your orders, when you're an associated person on Wall Street, you're a broker or analyst, whenever you place tickets for, in the market for clients, you call the trade desk, whatever, those orders have an account number attached to it, so they know what firm the orders are coming from. All right, so your clearing agent knows, and so does the floor. The floor knows. That's how the brokers on the floor fill those orders for all the various firms. They know because each firm has an account number associated with it, so they know where these orders are coming from. So they were able to block, not necessarily block my orders, but what they would do is they would not execute me right away. They would wait instead of letting my paper flow like you should, they would take it and they would delay, and I started getting bad fills. So that part of the mechanism, they got hip to it. Those were the days where you had more floor brokers and you had market makers in there, human beings actually executing your tickets. Everything's electronic now for the most part, but back then it wasn't. So I did that. So cotton started being a jerk to me, and then that left me with the soybean. So I would execute the same thing in the soybean market, and it got labeled the soybean system because what it would do is it would get in and take a point and a quarter to a point and three quarters of profit every day, and it did it pretty much without fail. It was just a phenomenal mechanism. So that's just the beginning origins of these post-wave price triggers. So suffice it to say, the post-wave price triggers in and of themselves are a phenomenal, phenomenal tool. You don't need to have anything else. You don't even need to know anything else. You just need to know how to place the orders in the market before the opening bell. That's it. Have your orders sitting there. Boom. You can place your orders Sunday night, Monday morning, and just let them sit there all week until they're triggered. That's just that simple. And then get in there, take your profit, get out, call it a day. Pretty easy stuff, right? So back to Richmond Mines. Because the post-wave price triggers are pretty much right there next to each other the way they are with those, if you look at the sell short and the long trigger, that's a powerful thing. Because what's going to end up happening is either the downside will accelerate and you'll get another buck or two to the downside before this correction comes, or this is pretty much the bottom and you're going to straight up break out from here. Which I know that leads to the next question. You're going to say, well, why is it that you're going to experience a breakout without a rally alert? That's a very good question. And we'll go into that more in the next class at the Academy. So I won't spoil it here. Haha, you thought you would get me. No, sir. All right. The next question was about First Majestic. So let's go ahead and pull that up. And let's see what First Majestic is talking about this morning. Let's see. Okay, here we go. Make sure I'm looking at the right one. Okay, here we go. Okay, First Majestic, ticker symbol AG, is it's also in that locked in downtrend with a crash alert, and it also has a positive swing VIX under the positive momentum column. So this is another one. This one is also looking really, really interesting, except for the ranges are a little bit tighter. If you look at the pulse wave price triggers for the sell short and the long, go long, all right, they're not that far away, so you have to be on your P's and Q's on this one. Same story though, same situation. I think the best way to really look at this for the mining shares, including the junior miners this morning, is to look at your ETFs. The ETFs are really cool at the overall price schematic for what you can expect to happen or not happen during any particular trading session. So if you go down here and you look at JNUG, for example, JNUG has a rally alert today, though it is still in a locked-in downtrend. If you look under the negative momentum column for the sell short side, the right-hand side of your spreadsheet, you'll see that that swing trade alert, that 311 swing trade alert, like we discussed, is showing that you have a negative swing VIX with a negative bot check locked in. That means the downtrend is strong. It's locked in. And you don't really see any accumulation going on here. It's all about distribution at this point. This is a low price. Can prices go lower? They can always go lower. The trend is your friend. So this one's still locked in, but you can't ignore the rally alert, because what it's saying is something's being picked up. Some anomalies are being picked up within the market. There could be some quiet accumulations going on, and it could be enough to make the shares pop and make some of the shorts start liquidating and taking profit, and then you have a cascading effect. So you can't ignore it. I don't think it's likely just because the pulse wave price trigger on the buy side is a little bit far away from the market. So it's one you have to watch. Now I know this is going to lead to the next question. Well, then what's the best, how do you catch these reversals? The easiest way to catch the reversals is when you get your daily pulse wave price triggers, you do a cancel replace on your order type. That's it. So for example, if yesterday's buy, for example, in this stock, let's say was at $7, okay? You let that ride. Now, if today's price trigger is lower than $7, you're going to cancel replace it to the new price trigger. All right? If the new price trigger today is the same as yesterday's, then you do nothing. You let the ticket ride until you're filled. So that's how you would do that. As the price triggers come down, you can't replace them each day to follow and track the market. That's how you catch these reversals, okay? Same thing on the sell short side. All right, and we'll go into more of that at the academy as well. So that covers it on those. So back to the JNUG. JNUG is in the same type of position as those the first two mining shares we discussed, with the exception that we have a rally alert, and I don't think it's going to be hit. So JNUG, I don't think it's quite ready yet. I think we're going to have one more day of possible selling first, and then we'll get ready. So you may see a little bit of a pop today. I don't think it'll be too big. It just depends on what happens in gold. So jumping ahead real quick, let's just look at gold. Okay, gold last night hit a low of 1163.80. So we took out that major support, and that puts us well now below the Kumo cloud. All right, on the weekly chart on the gold futures, if we were to close the day, that would be a close below the Kumo cloud, and that would be setting up powerful downside momentum. We're also getting close to a possible cross between the shorter term trend line and the longer term trend line. The thing is, though, if it's not crossed yet, and if it does cross above the Kumo cloud, it's a weak downtrend signal. But the caveat is, if the price is below the Kumo cloud, that's strong, because what happens is the price acts like an anchor to weigh down those trend lines, and then it pulls the trend lines down. So the trend lines, they still have a way to go yet, though, because they're so far up top from the Kumo cloud, even though the price action has extended below it. So chances are the price action is going to shoot back up like a slingshot and come back up to the trend lines and meet them. So if we were to meet them halfway, that would possibly put just a tad bit above the Kumo cloud or slightly inside the Kumo cloud on the weekly chart. On the daily chart, price is far removed from the Kumo cloud, and it is bearish all the way, and it's locked into a negative pulse wave on the downside for your gold futures. So if you look at your spreadsheet for the gold futures, if you go to the matter of fact, let me change my thing here so I can look at what you look at instead of looking at what my own thing is. All right, on the in play tab, let's just stick to the in play tab. Let me see if it's on here or not. It's not. So you're going to have to look under your futures tab. Look under the futures tab for the gold futures, and then you'll see what I'm talking about, because it's not on here. So we'll just pull back up the futures tab here. I was just wondering if it was in the in play tab, but it's not. So, okay. All right. So back to the gold futures. All right. So on the gold future side of things, you see it has an 11 under the negative momentum. And as you know, that means negative locked in momentum, downside momentum. And when it's locked in like that, that's strong, that's powerful. You need that to come off. Anything that's an 11 or a 311 is a powerful locked in down signal. The 311 is even more powerful than the 11 because it's saying that you got just nothing but selling going on right there. So under the gold column, you have an 11, which is a locked-in, sustained downside momentum. But you got a 40 under the positive momentum column, which is a positive swing Vix. So all that means is that the market is set for another leg down, possibly. All right. Even if you get some sort of a rally today, it's a rally inside of a locked-in downtrend. So on the chart, I'll show you what that looks like when I do another analysis video using system charts. I'm in the process of updating, doing some updates with the algos to start showing those charts specifically in the end of day reports. That's why you haven't seen Bitcoin in a while, because I'm trying to set up the chart mechanisms from the system output instead of just using, you know, internet charts, if you will. I don't like. You'll see as we go on. I really don't like using internet charts or trading platform charts, because I want you to see the system output. All right, so looking at where the entry price is today on gold, catching a upside reversal, it is far removed. The post-wave price trigger is far removed. You would have to get a super rally in order for that to even get near being triggered. So I think what the system is doing, it's standing aside, basically, and allowing gold to do what it's going to do and find its bottom. But in the same token, like I said earlier, previously, you still place your triggers. You still place your post-wave buy triggers, regardless, because anything can happen. You know, what if gold would have run up $1,000 today? You would miss it because you'd be like, oh, I didn't expect that. That's why you place your orders ahead of the market and you let them set for the week, because if anything can happen, and you want to be there, you want to be lucky to say, oh, I can't believe I caught that. All right, that's what you want. If there's a flash crash, or if there is a reverse flash crash, a flash rally, you want to catch that. And the only way to catch it is to have your orders working in the market. All right, so always be trading, ABT, always be trading. That means you are always either going to be long or short in the market. You're always in the market, either long or short, or if you're flat, you're in the market by way pseudo in the market, meaning you have orders working to get into the market. So you always have tickets working and or always in a position. Always be trading. All right, so that's what that is. So in the gold, there's no, all things being equal, there's no entry price on the long side. The system is still short and still looking out for shorts. And truth be told, if you look at your sheet on the future side of things, the sell trigger was triggered last night. So you take that for what it is. And system's still short. What can I say? Let's see, what else? Silver, because that's what people have been talking about too. Silver's in the same situation as gold, with one little caveat. Silver has a crash alert in it for today. Yep, crash alert in silver. Now, the silver's sell trigger has been triggered in the overnight market as well. The short sell trigger has been triggered. So the system's still locked in short on this one. We do have positive swing Vix in the silver as well, though. So you gotta watch that. Can't ignore that either. But it's so far removed, like I stated with the gold, that who cares at this point? You just place the order and just let the market work. Let it come to you. Let it do what it's going to do. All right, and let's wrap this up here. We talked about JNUG. We got quite a bit of 911s. We got some rally alerts, quite a few of them. We have it in the Bitcoin ETF, the inverter silver, DSLV. You got bonds in there. You got JNUG in there. We talked about Gush, dry ships. The copper ETF has a rally alert. Sugar, crude oil, and the oil futures right now is up 92.5 cents at $50.37.5. And I believe this is the February contract is the new front month. So we're trading 2017 oil now. 2017 oil is trading at $50.40. Hit a high in the overnight market of $50.45 and a low of $49 even. So that's what's happening there. And as I'm recording this, initial jobless claims are coming out. And really the market is muted. Not a lot going on. The Dow is up with 5 points. NASDAQ's down 6.5. I need to make a quick note on the NASDAQ. The overnight market for the NASDAQ futures, the high is 48.27.5 and the low is 48.05 even. This is very important. This is very, 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 very important. The NASDAQ needs to stay above 48, man. If it does not, then the current rally is over in the stock market. It's over. You cannot have sustained rally in the stock market without the tech sector being involved. If this, I don't care, just like back in 07 when I was warning everyone that the rally was fake because the NASDAQ was not participating, everything else was hitting new highs, but the NASDAQ, no one wanted to listen, they laughed, and then when 08 rolled around, everyone was crying. So I'm just saying, the NASDAQ must participate. The NASDAQ must participate. It must stay above 48. It's been struggling at this 48 handle. That is not good. All right? It is not good. I repeat, it is not good for the NASDAQ to not be able to sustain above that. And I have to say, we do have a rally alert in the inverse ETF, the SQQQ. We have a rally alert, and I must say the price on this rally alert is really close, ladies and gentlemen. We do have a weak sort of a downtrend in the NASDAQ right now, so we could be hitting a possible support base. We do have a negative momentum thing to the downside happening, so we are pulse waving negative, but can't ignore this reversal. That's all I'm saying, folks. So with that said, remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can, give nothing back. Peace.